What's up, crypto fam, and welcome back to Zacchy Crypto Update. If you're looking for real, actionable crypto insights without the fluff, you're in the right place. Today, we're diving deep into a coin that's been making some serious waves, Kaspa. Now, Kaspa is almost always in the spotlight, but this time, it's for a reason that could be a game changer for its price action. We're talking about on-chain scarcity, technical strength, and a brewing supply shock that you absolutely need to know about. Stick around, because by the end of this video, you'll understand why smart money might be quietly accumulating Kaspa and what that could mean for your portfolio. Alright, let's get straight to the point. The data we're seeing right now for Kaspa is truly remarkable. According to recent reports, the percentage of Kaspa circulating supply that has actually moved in the past 24 hours has plummeted to an astonishing 0.78%. Think about that for a second. Less than 1% of all Kaspa coins are actively being bought or sold on a daily basis. This isn't just a random fluctuation, guys. The daily active supply for Kaspa is nearing record lows. What does this tell us? It tells us that Kaspa holders are displaying extreme conviction. They're not selling. They're holding tight to their coins, reducing the available supply on exchanges, and creating a situation that analysts are calling a looming supply shock. Now, why is this so significant? Because when less and less of an asset is being moved or sold, it signals what we call holder conviction. It means people are willing to hold through volatility, believing in the long-term value. This kind of behavior typically precedes major price movements, especially when it's coupled with growing demand. Imagine a limited edition collectible where no one wants to sell. The price goes up when demand rises, right? It's similar here, but with a highly advanced digital asset. But the scarcity story for Kaspa doesn't stop there. This isn't just about temporary holding patterns. It's baked into Kaspa's very design. We need to talk about its stock-to-flow ratio. For those new to the term, the stock-to-flow ratio is a way to measure the scarcity of an asset by comparing its existing supply, the stock, to the rate at which new supply is being produced, the flow. A higher stock-to-flow ratio generally indicates greater scarcity and, historically, has correlated with higher asset valuations. Bitcoin maximalists love talking about its halving every 4 years, which increases Bitcoin stock-to-flow. Now, here's where Kaspa truly stands out. Kaspa's stock-to-flow ratio doubles every single year. Yes, you heard that right, every year. This is fundamentally different from Bitcoin's 4-year halving cycle. Kaspa cuts its block reward annually, accelerating the rate at which its supply becomes scarcer. This unique emission schedule is a powerful, built-in mechanism for increasing scarcity at a much faster pace than many other cryptocurrencies. It's a deliberate design choice that enhances its long-term value proposition. And what's mind-blowing is that despite this aggressive scarcity model, Kaspa still functions as a fast, feeless medium of exchange thanks to its innovative block-per-second DG architecture. This is a rare and powerful balance. On one hand, it's designed for long-term value appreciation through scarcity. On the other, it offers immediate utility for everyday transactions. It's truly trying to solve the blockchain trilemma of security, scalability, and decentralization in a unique way. Okay, let's zoom in on the price action. It's seen a slight uptick on the day, but what's far more important is its sustained position. Kaspa is holding firmly above its 200-day moving average, which is currently sitting at $0.109. Now, for those of you who follow technical analysis, you know how crucial the 200-day moving average is. It's widely considered a key indicator for determining the overall long-term trend. When an asset breaks above its 200-day moving average and then successfully holds that level, it often signals a shift from resistance to support. Kaspa did exactly that earlier this month, breaking this long-term resistance and now consolidating above it. This flip of a major resistance level into strong support is a very bullish technical signal. The Relative Strength Index, or RSI, is currently hovering in the mid-50s. This tells us that momentum is neutral, but with a slight bullish lean. It's not overbought, meaning there's still plenty of room for upside before we hit overheated conditions. This consolidation period we're seeing after breaking the 200-day MA is healthy. It allows the market to digest gains, build a stronger base, and prepare for the next leg up. So what does all this mean for Kaspa's short-term price outlook? Based on the current technical and on-chain indicators, the path of least resistance for Kaspa appears to be upwards. If Kaspa successfully defends that crucial $0.109 level, which is our primary support, the 200-day moving average. Here are the upside targets I'm watching closely. First, we're looking at $0.125. This will be our initial resistance point. Beyond that, the next significant hurdle is the 13 cents zone, which aligns with a previous high. Breaking and holding above 13 cents could open the doors for a much larger move. Now, of course, in crypto, anything can happen. So, we also need to consider the downside levels to watch if we see a breakdown from this current support. The first level to watch would be $0.102, which acts as a mid-range support. And if things get really hairy, the structural demand zone around $0. $0.95 would be our ultimate line in the sand. But, honestly, given the combination of that incredibly low active supply, the rapidly rising stock-to-flow ratio, and this solid technical footing we're seeing on the chart, the odds favor an upward trajectory here. The market is showing extreme holder conviction, and the underlying monetary model continues to strengthen. Kaspa's narrative isn't just hype. It's built on strong, undeniable data. We're seeing a cryptocurrency chain demonstrating extreme holder conviction, something we rarely see in this volatile market. The monetary model, with its annual halving-like events for the block reward, is designed for long-term scarcity, making it increasingly valuable over time. When you combine near-record lows and circulating supply movement with the price holding strong above its 200-day moving average, it paints a very compelling picture. Kaspa could truly be setting itself up for a sharp, significant move in the near future. This is why it's vital to keep Kaspa on your watch list. And as always, guys, please remember, cryptocurrency investing is highly speculative and involves significant risk. The information provided in this video is for educational and informational purposes only and does not constitute financial advice. Always do your own research, DYOR, and consult with a qualified financial professional before making any investment decisions. Never invest more than you can afford to lose. If you found this deep dive into Kaspa insightful, hit that like button, subscribe to Zacchy Crypto Update for more alpha, and don't forget to ring the notification bell so you don't miss our next video. What are your thoughts on Kaspa? Are you holding Kaspa? Let me know in the comments below. I love hearing from you all. Until next time, stay safe out there, stay profitable, and I'll catch you in the next one. Peace out.